Hello, everyone. A very good evening to all of you. So glad to have you all with us for our annual budget deep dive. I am Swati, presenting here on behalf of Sailotech. For those who are new to Sailotech, let me introduce you. Sailotech is a global digital transformation company specializing in AI-driven business automation solution, and we are pretty proud of one of our flagship product, that is iKapture. It is an AI powered accounts payable automation platform that's helping businesses revolutionize their financial operation by streamlining payments and boosting cash flow efficiency. So yeah, moving ahead, it's been 3 years in a row that we are teaming up with the experts at Darda Advisors to analyze the budget session. And of course, we are honored to have Vineet sir from Darda Advisors here with us again this year to help us dive into budget 2025 highlights. First of all, let me quickly introduce our star panel. We have Mr. Vineet Suman Darda, founder of Darda Advisor, and he is a true guru of indirect taxation. Of course, he will be giving us the deep down on the economic survey and all the important tax policy changes. Next, we have Mr. Jairaj Srinivas, director of CIMEI, who will be giving us a great overview of the budget. Then next we have Mr. Aditya Surana, tax head at Hetero Limited. He is a specialist in direct taxation and he will be sharing his expertise on income tax updates and corporate taxation. Finally, we have Mr. Nikhil. He is founder of Keval Investment Services and he is a certified financial planner. Nikhil sir will be diving deep into the budget's impact on the stock market. We are incredibly lucky to have them all here. So I would like to welcome all the expert panels here. And moving ahead, I'll first would like to invite Mr. Jairaj sir to give the complete overview on the budget session.
Yeah, good evening to all the panelists over here, and it's nice to have honor to have you all on the same platform today. This particular post budget analysis is basically the first analysis which is happening today on the same day of the budget, because tomorrow being a Sunday, and most of the organizations are conducting all this analysis or either on Monday or Monday morning till evening. In fact, there was not many of the invitation which I have received. In fact, Mr. Vineet was kind enough to invite me for this particular session. So I'll just briefly tell that CIMEI, the Confederation of Indian MSME in ESDM and IT, is a pan-India organization serving the interest of the MSME in the ESDM sector, that is Electronic System Design Manufacturing. And we have subscriber across the country, be it West Bengal, Tripura, Odisha, Assam, Madhya Pradesh, UP, Haryana, Rajasthan, and of course Telangana, Andhra, and all these people. So we are kind of pan-India organization. We are serving the interest. Now, talking about the budget, myself and Vineet, we have collated for recommendation for the this particular budget this year, and in fact later on Mr. Vineet will tell that what was his expectation and what is that we have what has been delivered. But as far as I am concerned, there were three major things which we wanted. One is the restrictive import of tablets, laptop, desktop, which was a circular way back in August 2023, and later on, after so many extension, it was withdrawn. So during the election time itself, I returned to Government of India to revive that withdrawal. So that because based on that particular circular, many people have invested hugely, and we were put in dark. So government said that they will consider and discuss, but nothing. One of our demand was revival of that particular circular so that people can MSME sector will grow. And later on, there is one more thing which we wanted is, you know, actually the imposition of dumping duty on the PCBs, which was completely irrational, and many of the people have recommended that we should do that, but government has not even looked into that particular thing. Another issue which we were looking is a government announcement for setting up the electronic component ecosystem in this country. We were anticipating because, but I do not know. The finance minister and the Ashwin Vaishnav should tell us that why that was not considered. So these are all the things which went against us. But at the same time, if I remember very clearly, Mr. Vineet has in the direct taxes, he has recommended 15 lakhs exemption. But I think to an extent, I think it was more than a more enthusiastic recommendation what Mr. Vineet made. But we are not at loss because 12 lakh is also a reasonably good decision what government has taken. And apart from the industry, our electronic industry, the other thing which has come positively was investing more on making self-sustain on the pulses and the edible oil. It is really a good move by government of India in the finance bill. And apart from this income tax, there are other sectors. What I see that clean tech manufacturing. I think Vineet will tell us what exactly is that. And in the annexure E, it says that micro enterprises, credit card up to 5 lakhs, and changing the definition of MSME. Because earlier, though it was MS, what is that? MSC, no? SMEs. And during COVID time, they have combined micro with the small and medium sector, which has not sent a very good signal. But this time, they have considered, they changed the definition of MSME, to the new level, which I think somebody shared me on the WhatsApp also. So these are all the positive moves what the government has taken.
While Vineet will come and also deliberate on the fiscal deficit and other stuffs, I would just start off by saying that there was not much of a room given the fiscal deficit and the other pressures on the government to incentivize by granting more of an exemptions or freebies on the direct tax front. But still, I would say the most talked about provision or the proposal has been that all of us know is the enhancement in the basic exemption, or to say the enhancement in the rebate, more technically.
Am I audible now, Aditya now?
Yes, Vineet.
Yeah.
I will share the document also on the screen. Just
yeah.
Sorry for interruption. Can you see the document?
Not yet.
You can continue, Aditya.
Okay. So I was saying, see the much talked about 12 lakh enhancement limit for individuals, where an individual's an HF, wherein it means that those opting for new regime of tax, which was introduced a few years back, anyone who is earning income up to 12 lakhs would not have to pay a single rupee as income tax. And this is in addition to if you add 75,000 of standard deduction, which was increased from 50 to 75 last year, it actually tantamounts to 12 lakh 75,000. So while you have anyone earning income up to 12.75 not paying tax, it is not that anyone earning above 12.75% will get zero tax up to 12.75. 12.75. This is because there are changes in the slabs. I think, Vineet, can I share? Do I have the right to share? Because I think with that, it will be easier for the audience to connect.
Yeah, so I think, Aditya, you can share. I shared the document to you.
1 second. I was saying, the 12.75 thing, the way it works right now is up to 4 lakhs, there is no tax. And this is all for the new regime. I have not yet spoken about the old regime. So 4 to 8 is 5, 8 to 12 is 10, then 12 to 16 is 15, and then there onwards 4 lakhs each. If you see, it's a gap of 4 lakhs each for each slab with a graded rate of 5% enhancement in each slab. So, for someone up to 12 lakhs, which is falling in the 10% thing, there is a rebate which makes you to pay 0% tax. But if someone goes above 12 lakhs, then that rebate is not applicable. So you end up paying taxes there. But even otherwise, there is a saving in tax because the slab brackets have been have enhanced from 3 lakhs. You can see, which was existing as of now. It has been increased by 1 more lakh to 4 lakh. Earlier, it used to be 3 to 7, 5%. Now it's 4 to 8. So that way, there is incremental savings in each slab. And I think there's a chart below. If you can see, for someone who's at say 20 lakhs, and the tax payable under the new regime is 2 lakhs, the total benefit accruing to him is 90,000, because earlier, that is up to now, he was paying 290, but henceforth with the proposal, he will be paying 2 lakhs. This is on account of savings in the expansion of the bracket and as well as reduction of rates. As you can see, there was not 25% before. There was 20% and then 30%. So above 15 lakhs, it used to be straight 30% tax. Now, if you see above 15 lakhs, it will fall in this bracket. It will be 20% still. And 30% only activates after 24 lakhs, which was earlier 15 lakhs. So this was on the much talked about proposal on the 12 lakh limit. I think then there has been a lot of hue and cry about the increasing number of TDS sections. We have seen each budget introducing some or more TDS or TCS sections, to the extent that I've heard people saying the alphabets will fall short and they will have to keep adding some more numbers after the alphabet. But this time has been thankfully good on that part, and the government has looked to rationalize by reducing the the number of rates, and two, the thresholds in line with the inflation and also the business requirements. So the TDS provisions, as we know, have been in place for long enough, and the idea for it was to capture the transaction and also to help government collect taxes on the transaction at the point of transactions. It has seen enough of litigation, and there has been some maturity built in. I think all of this would have led the government to increase the threshold, provide some relief for small time transactions, small time traders, so that they don't fall in the compliances of TDS if the amount is not big enough. One of them is the senior citizens who earn interest from banks and saving banks or post offices. For them, the limit was 50,000, which has now been increased to 1 lakh. And this should be a benefit. This should be a welcome relief for them whose major source of income is interest, and who are above the 60 years of age in the senior citizen category. Then there is another limit increase in case of TDS on rent. For corporates, for individuals and HUF, which have certain threshold which meets the tax audit requirements, if they are the ones who are paying rent, the limit for deducting TDS was 2.4 lakh per annum, which is 20,000 per month. Now it has been increased to 6 lakhs. This is now at par with individuals or HUF who are not subject to tax audits, like, for example, salaried employees who pay rent. For them, currently the provision is 50,000 per month only, or that is 6 lakhs per annum also, for deducting TDS. Likewise, there was a provision for collection of tax at source for any LRS liberalized remittance scheme payment in excess of 7 lakhs outward remittances from India under LRS scheme. TCS used to be applicable. That has been increased to 10 lakhs. Plus, in addition to that, any payment for education, foreign education in abroad, in universities or educational institutions outside India, from certain specified lending institutions, has also been exempt from TCS. Then there were certain new provisions introduced a few years back on charging a higher rate of TDS. So I was saying, so there were certain provisions introduced a few years in the recent past where the higher rate of TDS was being deducted in case the deductees did not furnish PAN number or did not have a valid PAN. In addition to that, a new criteria was introduced a few years back, wherein if the deductees were non-filer, that is, they had not filed a return of income in the previous years, even those would have were been subject to higher TDS rates, which were almost 2x of the normal standard TDS rate. So those there were a lot of difficulties when the provisions were introduced in tracking if the deductees were actually falling in those default cases. There were many representations made by the industry. The CBDT also came up with a portal facility to check every time on the status of the filers, but still there were issues, an additional burden in making payments, and it was causing inconvenience. Now the government has removed the requirement of deducting higher TDS in cases where the deductees are non-filers. So we need not check that anymore. It's only when they don't furnish their PAN or the PAN is not valid, TDS has to be deducted at a higher than the 2x rate. So this has been simplified this time. And another move that has simplified, or another move that has brought provisions at par, is that for TCS delay in payment of TCS or not filing TCS returns on time or not complying with the provisions of TCS, there was a provision for imprisonment before, which has been removed. This is in line with the changes that was made last year for the non-compliances with the TDS provisions, which was also decriminalized last year. Then there is a provision on sale of goods, which is subject to TDS, and there is another provision which was already in place, which used to apply for TCS on sale of goods. So this, when the TDS provisions were introduced under 194Q and TCS provision under 206(1)(h), it often happened that the same transaction ended up being taxed twice, one as TCS, one as TDS, in two hands by two parties, and this created a lot of confusion. So then there were clarifications issued, and even the changes were made, and it was clarified that TDS will be superseding the TCS. But still, we have seen in regular day-to-day businesses, there is still confusion. At times, people deduct TCS, and the other party has to take declaration to avoid double taxation on both the sides. So this has also been simplified now, because the objective was to capture the transactions in the system and not to cause inconvenience, because the purchase of goods or sale of goods is like the most common transaction in any business. It's a day-to-day transaction, and so now it has been clarified that TCS will be omitted on such transactions. Only TDS of 0.1% will be levied. And in addition to that, there have been a lot of other changes in a lot of other TDS sections, which are more from an information side. There's nothing much to be analyzed. Like, for example, TDS for professional services or technical consulting services under 194J. Threshold has been increased from 30,000 to 50,000. Similarly, for commission, the threshold has been increased from 15,000 to 20,000. So likewise, there have been a lot of these sections that you will find in which the thresholds have been increased in line with what I was saying in the beginning. After this, there has been one extension. Can you go back to the earlier slide? Yeah, this one. So there is a facility to file an income tax return ITRU, which is called an updated return. This is for cases where a taxpayer has missed the deadline for filing the returns, and also the deadlines for filing the belated returns and the revised returns. So if someone finds that he has to file returns, they are certain, or the returns has been filed and he is not disclose all the sources of income, there was no window earlier if the timelines for belated and revised returns were over. This was introduced a couple of years back when a facility was provided to the taxpayers that they can, in spite of having all those belated and revised returns windows being closed, they can still file a return, and a new return form was introduced in the form of ITRU, wherein a time limit of 2 years was given from the end of the assessment year. That is 3 years from the end of your financial year. You could still file the return, provided you have additional income to show it. So that means you can't claim refund, or you can't claim refund more than what you had claimed originally, or you can't claim more losses. So it has to be, in short, beneficial to the revenue. So in such cases, if you file returns within 2 years for the tax and the interest liability that you pay generally, and under normal course, you would have to pay an additional tax of 25% if the filing window has been within 1 year, and if the filing window has been within 2 years from the end of the assessment year, the penal or the so-called higher tax or interest rate under ITRU would be 50%. Now, this a lot of taxpayers have used these facilities, as the finance minister quoted in her speech, and bolstered by that, she has extended the period for allowing to file the updated return from 2 years to 4 years in a graded manner. From likewise, as I said, for the first year, the higher rate, the penal rate is 25%. The second year is 50%. The third year is 60%, and the fourth year is 70%. With that, one can still look to file its return of income up to max a period of 4 years from the end of the assessment year. That means 5 years from the end of the financial year. And there has been one further clarification given here, that in case there is a reassessment notice under 148A issued in the meantime before the returns are filed, ITRU is filed, then he is debarred from filing the ITRU. However, if after giving 148A notice, it is concluded by the department that the case is not fit for reopening and the case gets closed that way, then the taxpayer goes back to the original position and he can still have the window of filing the ITRU as long as the 4-year window is open to him. So 148A is basically a notice which is a precursor, before the start of the reassessment, the officer will give you the reasons for which he thinks the case should be open, and that notice should be replied generally within 7 days. That's the time given. Based on the reply, the officer decides and pursues further. If he thinks the case should be opened, he initiates the proceedings under reassessment under 148. And if he thinks there is no case to reopen the matter, then he closes it. So in case this 148A notice is issued within the 4 years and ITRU is not filed, but 148A is not converted into a reassessment proceedings, and 4 years have still not elapsed, the taxpayer still has the option to file ITRU in such cases. After this, there have been some updates on the personal taxes beyond this as well, personal income taxes, that there is a benefit. Remain on the last slide. There is a benefit being provided for individuals to claim 2 house properties as self-occupied, that is not declaring any rental value from there. Earlier, the reason required was that if the owner is not being able to occupy it because of occupational or professional requirements, say he is in a job which is far away or which is not convenient for him or her to stay in the owned property and stay in the rented property, that was one of the reasons. Now, the requirement for furnishing the reason has been done away with, and straight away, without condition, no questions asked, 2 self-occupied house properties has been permitted to be declared as 2 properties have been permitted to be declared as self-occupied, and that is offering no rental income and nil annual value. Beyond this, there have been a lot of changes in the transfer pricing front, wherein a new provision has been introduced by which the taxpayer has got an option to exercise, wherein if a transfer pricing assessment is concluded for a year he has an option to extend it for 2 successive years and continue if provided the transactions, international transactions are the same for the next 2 years. So it's like a safe harbor where you get a transfer pricing adjudication from the TPO for 1 year. And if the taxpayer wants to buy fees and agree to that position for the next 2 years, he can apply for it. There are procedures which will be notified. Once he applies, the TPO will examine, and if he approves, then the next 2 years is also frozen for the results that is concluded for the first year. So this is a very welcome move, as we know that as of now, how it happens is that the companies keep getting transfer pricing assessment year after year, and generally it's every year that you get notices if the volume is high or if you have been assessed before, and especially if there have been adjustments made in first year, then it's most likely that you'll get it in the next few years as well. And most of these companies, especially the companies that we have mostly in Hyderabad, in nature of ITES or captive software services or technology services provider who work on cost plus simple cost plus methodology, they have simple and straightforward transactions of export of services to their group companies outside India, and the same transactions and same terms continue for years after year. And if they have to go through the same rigmarole of transfer pricing assessment year on year, it was actually not making much of a sense, because even the TPO in practicality used to be influenced by the results of the past, but still the officer and the administration and the company had to go through the entire process and also spend a lot of months in concluding the assessment. So it was not only it was not only it was not only an extra cumbersome step for both the administration but also for the company. And this is a welcome relief, whereby if the taxpayer wants, he has an option to buying fees, or is an option of freezing the transfer price with the officer based on the first year conclusion. So this will help. This will, I believe, this will help save a lot of time, money, and also uplift the image, because most of these companies would be a lot of these companies will be subsidiaries of foreign companies having FDIs in India, and to have a certainty on transfer pricing gives them a big relief. Uh, Also because it doesn't have, it avoids any double taxation. What happens is when the assessment happens, it's almost 3 years down the line from the end of the financial year. So an expense, so in case of a simple, say for example, in case of a simple transfer price, when the Indian company bills to its parent company, say in US, so my income is his expense. So any adjustment made on my income doesn't get a corresponding expense deduction in his country most of the times, because by that time the limitation of time has hit in his country, because we get the orders or conclusion by 3 years. By that time, US may have closed the account and they won't allow the corresponding benefit. With this, at least they will get some certainty, and hence it's a welcome move, I believe. So. And then there have been some changes to reduce the compliance burden on small charitable trusts and institutions, wherein currently there is a provision to renew the registration certificate after every 5 years, which has been extended now to after every 10 years. Next slide, please. Okay. So I think as I was talking on steps being taken on reducing the litigation, and especially on the international taxation front, transfer pricing, there's one more positive proposal made by the FM, that there are safe harbor rules which have been already determined for certain kind of businesses. She has indicated that the safe harbor rules will now be expanded to cover more businesses, or cover more nature of transactions. So we will have to wait for the notifications, but it is a much awaited proposal, which was quite a lot awaited in the last 2 budget sessions also. Then I think these are generic bullets. there have been some extensions for the sunset clauses, including the extension for startups, recognized startups, which used to which for which there for whom there are provisions that 3 out of the 10 years of their operations will be completely tax free if they fulfill certain conditions. One of them was to get incorporated before 31st March 2025. This has been extended for 5 more years, given the contributions that startups have made to the Indian ecosystems and the kind of jobs that they have created. This is a welcome move. Similarly, IFSC center in Gujarat, there was benefit granted for ship repair businesses. I think that has also been extended beyond the 2025. And there is a tonnage tax scheme which was applicable to ocean-going ships, which has now been extended to inland ships, that is, the ships which move on the river. As we have seen, there are inland waterways which has been now activated in North India and other parts. This is also a relevant move. I think this covers most of the key proposals. And I think we can move on to the next, unless there are questions of which you would like to take now or later.
Thanks, Aditya. Thank you so much. And we will take all the questions after completing of all sessions. And sorry for delay due to the internet issue. But the economic survey has given the indication how the budget will come. Even if you see that they are talking about minimum government, maximum business. And even the GDP rate expected for next year, they're given the range of 6.3 to 6.8 by limiting on the fiscal deficit. The same which has been concentrated and done by the Honorable our Finance Minister. And the complete budget is on the four engines of development, which was agriculture, MSME, investment and exports. And accordingly, all the proposals from DT, IDT was given on them. In agriculture, the major was one on the pulses. They want India to be more Atmanirbhar. They want to concentrate on the makhana, which is now the major efficient product in the food sector. Mainly on the Bihar, they are getting the separate board. MSME definition has been completely revamped, where the investment from 50 they moved to 250 crore, 125 crore, and turnover from 250 crore to 500 crore by having a different range in from micro, small, and medium. Bringing the focus product scheme exclusively for leather and footwear sector, which is more labor intensive. They're deciding to have a separate clusters for toys, to have a more India have electronic toys and further movement. For food processing, as I told you, they will create a board for makhana, loan and credit guarantee scheme given for MSMEs. And export, they are finally doing the ministerial wise and sectoral wise growth targets, which will be given to every ministry, overlooking by the Ministry of Commerce and Finance. They are also planning to create a warehouses for horticulture, so that we can have more exports at all air cargo, which is again a good initiative. We can move next slide, Swati. First time we have seen in budget where the main concentration started with customs, and it will see a Trump impact, which all globally have seen it. So obviously, all changes from customs are giving the big relief, which has given more than 1 lakh crore of impact in the budget. And under GST, there are certain key amendments based on GST Council recommendation, which happened earlier. And certain are new things. I start first with GST. The first part is whatever the way we have seen from last 5 years, the issue happening on the input tax credit on immovable property, mainly for the manufacturers or people giving on lease and all. In the Safari Retreat judgment, the relief was given by understanding the definition of plant or machinery, which is part of section 75D. Now that definition has been replaced that phrase from plant or machinery to plant and machinery retrospectively from 1st July 27. So now the big issue will be wherever the company has taken an aggressive view based on High Court judgment of Safari Retreat, which came in 2019 and which has been also upheld by the Supreme Court with factual check on each aspect, now had been nullified. It means now all the further litigation will happen where the authorities will issue notices wherever the company has claimed the credit on such immovable property. It's going to be a big issue in the industry, and obviously I understand that this retrospective amendment will be challenged because it is putting all the players who have taken the right view based on the law on the wrong side. Next, Swati. Yeah, next slide. Again, it's previous one. Again, additional burden on people. Till now, if I am going to appeal under GST at Commissioner Appeal at first appellate level and second appellate level, which will come now from April at GST Tribunal, if I have only penalty in my order, I will not pay any pre-deposit before proceeding for filing appeal. After this amendment, any order which has exclusive only penalty under 73, 74 or under any other sections, then they need to deposit 10% pre-deposit of the penalty amount in the first appellate authority, and for second again a mandatory 10%, which in addition to the appeal. It's going to be a major impact where companies decide now. But till now people are filing appeals considering there is no pre-deposit on the penalty. But now, considering the major change where they need to also pre-deposit it, they will need to decide which litigation has to be continued in future, which has to be closed at the first level itself. Yeah, next slide. Previous one, yeah, thank you. It is not a major change, it's only explicit provision put under the law where the input service distributor who is already paying reverse charge on the domestic or imports, whether intrastate or interstate, mostly all imports are come under IGST. Now exclusively it is mentioned that you will pay and you will transfer it to other places. That's a major amendment happened in this provision. Next one. It's always a clarification industry are looking for. Whenever an SEZ, a special economic zone or a free trade warehousing zone doing transaction of exports or doing a transaction of domestic clearance, in between they are doing the transaction between a mediator or other part, whether such transaction taxable or not, and already people got notices and orders. In that case, they now clarified by putting under Schedule 3, which say any goods or service outside the purview of GST, that such transaction now is not taxable retrospective. So you can see all changes they are doing retrospectively. Some are in the favor of authorities, some are in the favor of taxpayer. And also simply as they do everything, they will not give any refund to already paid taxes. It means if you are not aggressive in your view and you already paid taxes and after multiple years the government make an amendment, it means whatever tax you paid is gone in the government kitty. And whoever taken a view where they can understood yes, this transaction cannot be taxable beyond explicitly mentioned in the law, they are in the benefit mode now. Next one. It's a good change, which even the GST Council mentioned in the last meeting. On vouchers, there are number of circulars issued, number of clarification issued, when to pay tax, how to pay tax, and all. And mainly the all big market players, whether the e-commerce or having the brick and mortar shops who are giving the vouchers as an add-on, they were facing issue which rate to pay tax, how to pay tax, and all. Now the time of supply under goods and services of both has been omitted. The purpose of omission is now the general rule will apply to all these vouchers, not based on the specific transaction. Earlier, I need to pay if I know what type of supply I am doing. If I don't know, then I will pay only one side of supply. And vouchers tracking, putting it, having multiple compliances and putting a litigation, now we expect that all these will be resolved. It's a good move from the GST perspective. Next slide, Swati. I don't know now, already people are struggling with GSTR 1A, a 2A 2B reconciliation. And now one more thing came, where they ask you, in case if you issued an invoice of 100 and then you issue a credit note of 40, on 40 rupees credit note, you cannot make adjustment in your GSTR return till the buyer reverse the tax. It means you cannot have a 12 benefit where you have taken the benefit and even the buyer has taken the benefit. I am not able to understand how that will be tracked if I am issuing a multiple credit notes, and it's very common in B2C industry where if I am giving 100 and I am giving discount or other things. And also it's a major issue under valuation when I am giving discount, what type of discount, is a pre-discount or agreement discount or post-agreement discount. In addition to that, now if I need to track on every credit note, again I am putting additional compliance. Here we are talking about ease of doing business, regulatory reforms, improving the laws by having the brief reading, less content and more crux. That's why even the direct tax bill is coming. And in GST, and every time they're bringing the new compliance, putting an additional burden on taxpayer, it will again a major issue which they should resolve and clarify how should I track it. Either you create a mechanism in the GSTN portal or give me the solution for that. Next. As we've seen earlier also, machine-wise, some sector like tobacco and all were asked to put some tag number and give it. Now, they have put a specific provision where track and trace for identified product, which we are not aware which will be there, but looks like it will be mostly for the unregulated industry, mainly for tobacco and tobacco and all. In that case, you need to track, you need to put unique identification marking and measures. You need to ensure that the records are being maintained. If you are not maintaining, you will have additional penalty in section 122B, which can go up to 1 lakh or 10% of the tax payable, whichever is higher. It means if I'm paying 40% or along with cess and all, I need to pay additional 10%. Yes, that tracking has to be now managed. Now, how it will work, what return I need to file, any additional compliance, that all still has to be clarified by the authorities. Next one. It is mostly a generic changes on the return filing and automation of reports which are generated now. There they want to clarify. And the other one is mainly the local authority definition further expanded to cover any municipal fund or a local fund. Next one. Now I will talk about custom, where more than 20 minutes given by our Honorable Finance Minister. So major changes, pro changes to taxpayer and major relief. And such relief were not expected considering always custom is considered as a draconian law, which have more regulation, uh, more prosecution penalty and provisions. The major one is any company who is availing the concessional duty under specified notification, where they need to comply with the IGCI, which is the Import of Goods and Concessional Rate regulations. Now, under this regulation, earlier I need to file a monthly return, which mostly people are not filing it. And tomorrow it may be a major compliance issue. Now they can file on quarterly basis, a big relief. The second one is mainly on your usage of goods. Earlier, the restriction that whatever goods imported under IGCR regulation, under specified notification, has to be consumed within 6 months from the date of import. Now that 6 months has been increased to 1 year. A major good change from a compliance perspective. Now, if we talk about a provision assessment, when provision assessment comes, when I am not clear whether my value or duty or relevant notification is applicable to me or issue and classification, then either I apply for a provision assessment or an officer put a point that it has to be gone under the provision assessment. Now, they told officer has to close the provision assessment within 2 years from the date of inception of this provision assessment. There is no time limit. It can go beyond it also. Now it is clarified and it may be extended to an extent up to 6 months and further based on the senior officer approval. Next one. Yeah, next one. Again, it's a major relief for the taxpayer, which is very common that when I'm filing a bill of entry, there may be issue on the value, on duty, on classification, on application of notification or a free trade agreement relief. In all that case, what happens? They have a time limit for amendment of bill of entry, which is should be approved by the proper officer to take it forward. But now, beyond that provision, now another provision added where I, a taxpayer, can go decide which bill of entry I feel there is a challenge. I go and voluntarily say my liability is 100, but actually it's 1, or I paid 100, my actual was 40 rupees. In that case, I will put a request. With request, accordingly, amount of assessment will be adjusted. And that amount I can pay with interest without penalty, or I will ask refund. And even refund has to be provided within timeline. If refund is not provided, then even I am eligible to get interest. Only in the cases of audit or investigation, I cannot do this voluntary revision of entry post clearance. And it's very good relief. Mostly after post clearance, there is always a scrutiny, or there is always question that you have done a fraud, a collusion, or a misrepresentation of facts. But looking to this change, now any importer exporter can go on his own, declare if he's right or wrong, or he paid excess, get the assessment done, revision of assessment done, pay the duty with interest with no penalty, or get a refund. If delay in refund, get the interest. Next. It's only a changing the name of the settlement commission. The provision of settlement commission as we prevail in the excise duty, which has been taken in the customs. Only change which is happening is an interim board will replace the settlement commission authority. Otherwise, all things remain same, and this will come with effect from 1st April 2025. Next one. So there is even impact of the custom duty on various industry sectors. Just I will give brief before I give to Nikhil. So there major changes happened in the sector on the goods. mainly from electronics. If you see in the battery segment, they have reduced the duty nil to all the capital relevant for batteries for mobile and lithium-ion batteries for other purpose. They have reduced the rate on the solar panels, solar modules. They have increased duty on the flat panels. Somewhere they have continued the exemptions, they have continued benefits. All relevant notifications have been continued, and other sectors also they given relief like for agriculture, fish, textile, mainly for technical textile and all. In brief, yes, that budget has concentrated on the major changes on the imports procurement, which may be raw material and capital goods. They did not concentrate it on the finished product except like your motor vehicles, whether it's a motor car or a moped or a higher version of cars or a second-hand motor vehicle, all have been drastically rate reduced, like from 125 to 70, from 100 to 70. So you can assume completely we can see the major impact of having Trump impact. Now, Swati, can you share the screen? Now we will discuss on the stock market impact part, where Mr. Nikhil will discuss on how the way all these proposals and other key proposals for agriculture, MSME, investment exported impacted the market. Yes, market have obviously didn't perform well today as expected, but our two mid-term and long-term we can look. Over to Nikhil ji.
Yeah. So thank you, Vineet ji. Am I audible?
You're audible. You can on your video.
Yes, I am visible. I am.
Yeah, visible. Yeah, please continue.
And so lovely presentation, Aditya ji and Vineet ji. Thank you. I think you are deep dived into various aspects of the budget in such a short period of time. So for me, the biggest impact I think from this budget so far is that we are moving towards a consumption economy. Something like in the lines of US today, which is consumer. So 60% of India's GDP is consumption, private consumption. And today's budget announcement of stating that 12 lakh rupees of income will be, totally tax-free in the hands of a consumer will lead to higher consumption and higher growth for everybody. So there won't be any sector that won't be impacted. Of course, the impact might be rubber band effect. Some might get it quickly, others will see it over a period of time. For example, so today's stock market only FMCG and auto went up, whereas everything else was flat or negative by few points. But that doesn't change because details are yet to come. But mota the thing is, it is extremely important step the government has taken. I think a little late, but yes, it is nevertheless a very important sector, implications for everybody, whether you are into manufacturing, whether you're into services, whether you are into roads and building and everything. It will definitely have a positive impact over the years. In fact, one assessment I read on Twitter today, this will have an impact of at least 1 to 2% on GDP. Now, how true that is has to be seen, but this will definitely have a, these are not my words, I've used some economists' tweets to share. So yeah, so that's the whole part. Now, I think, yes, income tax reduction is definitely, more disposable income, more spending across the board by individuals. Indirect tax changes, reduction in basic custom duties, we all discussed about it, mobile phones, goods, every consumer item that we import. So one contrasting thing, like Vineet said here, is that while US is going to increase tariffs on other countries, we are reducing import duties. So that again sets the tone that we are moving towards a consumption economy, and we will dominate the world by our consumption. Then, so these are some of the highlights. And overall economic growth projected is 6.8, but it might actually be much higher than if everything goes by. However, the caveat here is that we are entering into a highly global uncertainty environment. So global trade wars are going to heat up in 2025. This might impact India as well, directly, indirectly. So for 2024, FIIs pulled money, a lot of money out of India, and stock market saw a lot of correction, 10 to 15% correction. Small and mid cap went even further down. So 2025 is going to be even more tricky with global trade. In fact, US is going to be the most volatile it has ever been with Trump government coming there. So what US does with tariffs, what happens with their economy, they are they are extremely hot on GDP growth, and inflation is also extremely hot. So how does the Fed manage that is also something to look out for. So there are a lot of headwinds coming our way as well. While so I think what this budget does is that it softens the impact of external volatility on Indian consumers, at least. Companies, on the other hand, might face a bit of a headwind there, but Indian consumers will be shielded to an extent because of the reduction in income tax there. Now, can we go to the next slide? Yeah. So sectors that definitely will see impact, like we discussed. Government has continued to increase every year its focus on infrastructure. So anything and everything related to infra continues to do what they are supposed to do. Infra is a very long gestation project, so things that we are planning today or seeing today might take another 4 or 5 years to roll out. But yes, we are on their way. I think a lot of news was there, like Vineet ji and Aditya ji mentioned about small and medium enterprises getting some business related ease happening there, and some more focus on the PLI schemes kind of a thing. Healthcare is definitely going to be one of the biggest beneficiary going forward, because Nirmala Sitharaman ji at the beginning itself has said that Heal in India initiative. Now what it means is that global tourism, healthcare tourism will be a focus that India will try to tap into. We have the cheapest and or at par with any country when it comes to healthcare. So we can cater to global demand when it comes to healthcare. They have removed, I think, import duties on some very, very essential medicines, including cancer and other things. So that I believe will play a lot of role going ahead. Healthcare will become a primary, focus. So for industries. So that is one thing I am very excited about healthcare. I've always been bullish on healthcare. Insurance sector, I think the biggest was the fact that FDI limit has been increased from 74 to 100%. Now insurance does not have any particular benchmark. It reflects under financial services, or it comes under financial services index in the Nifty. So overall impact is positive there, and banks are also coming out of a bad debt cycle. So again, financial sector is extremely attractive at this time. I think digital transformation, like reduction in duties for manufacturers or tablets and phones and all those things are already being discussed. I don't need to diverge into that, but definitely there will be going to be e-commerce push. This will impact positively for e-commerce as most consumer spending is seen there. So manufacturing, including logistics, was also focused. I think Aditya ji covered that part pretty well. I don't need to diverge much. Yeah, that's all. I think so far this is what I can quickly summarize the budget. We'll get more details as we go ahead.
Thanks, Nikhilji. And obviously, the broad view of the budget was on the reforms, and which we can see in the all sector. Maybe in the coming days ahead, we will see impact. Now, before we start Q&A, I have one question directly to Aditya. Aditya, as we've seen, next week they are putting a DT bill, new bill, which they mentioned as 50% of the current law, less words, less sections, less provision, and now they also made changes in the current law. Can you give more insight on how the DT bill will look, and whether anything will be replicated from the current regime, and whether they are putting a completely new regime per se, or per se it's only changing of the act per se or the complete regulation? Aditya.
Aditya ji, unmute.
Yeah, it's a good question, and I said even I won't have 100% answers to all the questions because it's anyone's guess. But yes, from what I am gathering and from what I am learning here is that the provisions which have been proposed now are likely to stay. Otherwise, because it's too close to the new bill, right? If it gets reversed in the new bill, then you would have that. I mean, anyone would question the intent for. Then is it a stopgap? So I think those should roll over. Plus, the bill, as he mentioned, that it will have half of the size of the thick act that we carry. So it will be meaning which a lot of provisions in the act right now are redundant. They do not have any applicability. Those should be removed. A lot of them are, I think there is duplicity that will be removed. So I think this is in line with a lot of other countries. I think the US follows this practice of, issuing guidances on provisions which are no more relevant. They are redundant. Even the regulations or some judgments which are no more. They bring in those updates from time to time, and we have not been doing it. We have been keeping all the provisions in our act since 1961, even the ones which have no applicability, the provisions stay. I think this new bill is expected to at least omit all those, irrelevant, those have no applicability at all. Those provisions will also help reduce the litigation a lot, because when the provisions itself are not there, the interpretation will not be a matter of debate because it's out of the act. And as he said, there will be a lot more simpler way of writing the law. So right now we have proviso, then sub-proviso, then clause, sub-clauses, then to the extent that you don't find, you fall short of terminology to define the structure of the section. So I think those, for example, one starting example that comes to my mind straight away on the top of my mind is that there is a Rule 11 UA under the Income Tax Rules 1962, which is on the valuation norms for transfer of a property or a share. That has, the structure is so that you have a clause, then you have a sub clause, and then it goes on like this. So I think we all have to wait how it unfolds and how it will see the light of the day. But we are all hopeful, and we are also pretty ecstatic that this could be turned around in a pretty short time since last July when the announcement was made. So while we are hopeful, we are also cautious to see how it pans out.
I think it should be, because Customs Act came only after 1 year, 1962, and they also need a complete revamp, like what's happening for direct tax. I think all laws has to be revamped to look into current situation.
Agree.
And by having them so much relaxation to all the taxpayers, as an individual taxpayer. So Nikhilji, can we see the consumption and all sectors who are concentrating on consumption will have impact like electronics or e-commerce or any other players who are listed, and will they have any stock market impact, whether a secondary or primary market? You are on mute, Mr. Nikhil.
Yeah. So you are correct, Vineet. This will definitely have a. I feel this is this budget is has unleashed the consumption animal. So far we were always a consumer economy, but we were always burdened with higher taxes also. But suddenly, what they have done is they have unleashed the animal spirit. Now let's see how the animal plays out. So I'm not just talking. So people, who would have. So the biggest impact would be on people who earn between 12 and 24. While people are focusing on below 12, I'm extremely, the highest consumer, the highest spender are between 12 and 24. They spend a lot of money, right from buying the most premium products to paying highest EMIs, like a house, or buying the premium cars, or having a couple of servants. Now this category will, even so for them, even a 10,000 rupees savings, suddenly their tax has come down by 10,000 rupees per month. And if you are a couple, that's 20,000 per month. So this will go a long way.
Double bonanza for all the taxpayers, correct?
Absolutely.
And that's why you can see in customs they have reduced drastically duty on premium sport bikes or premium motor vehicles.
Yes.
To give relief so that they can buy and give the even relief to Trump. So Trump should not put a counter duties on us, reduce our exports to them.
That is to be seen. I think.
But I can see in the customs, all these changes having 1 lakh crore of impact only from customs. Only customs, they increase duties.
Yes.
They have a PMP, a phased manufacturing program. There they always increase duty already to solar panel cell from 20 to 40. Now they made from 40 drastically to down 10. They understood that only deciding that India having manufacturing and not allowing others to have will have the barriers from other country too. And also it will impact our transition to like a renewable power. We are still not capacity we can have so much manufacturing capacity here. That's why they are putting, yes, now you can import also. We have reduced the duty on the panels modules.
Yes. No, I think one of the things that has gone under the radar is the very, very ambitious on the energy front, very, very ambitious target of 100 gigawatts through nuclear power, which is, and the timeline is also very aggressive, just 20 years. We after 30 years, we have 8 gigawatts of nuclear energy. In next 20 years, you are adding 92 gigawatts, which is unheard of, which is, this will have again impact on energy dependency. We will be almost zero dependent on weather or, renewable energy. So I think we have just shifted the gear from, suddenly we were driving at second gear. Now we have gone to suddenly fourth gear. This is if this plays out well.
Booster, I get this.
If this plays out, this should play out well for us. There is nothing stopping us now.
All are expecting the same. Swati, we can take now all queries from the.
Yeah, sure. So all the viewers, if you have any queries, please send your queries over the chat, or you can ask directly or raise your hand. We can have the interactive session here right now for the Q&A session.
Mostly people are happy with this tax relief for individuals.
Tax relief, right.
All are in the holiday mood now.
I have few questions, like from some of my teammates. I have got few questions, and personally also I have few questions. I would like to proceed with that.
Please go ahead.
Sure.
Yeah.
So
Can I come on?
Yes, sir.
Sure.
Yeah, Mr. Jairaj, you can.
See, the first thing is what I want to check with Aditya. See, you said there is no tax up to 1 lakh, for the bank interest generated from the bank deposits.
Yeah.
So suppose it exceeds 1
No
lakh.
TDS, sir. No TDS. Yeah.
Yeah, no. Suppose no TDS.
Yes.
Okay, there is no
TDS.
tax.
No TDS. So it is on the bank deducting TDS on your interest income. So earlier it used to be 50,000. Now they've expanded it to 1 lakh. So
1
beyond
lakh.
that there will be TDS. Yeah, tax will continue to be as per the slab that I mentioned, like up to 4 lakhs. No slab if under the new regime. If under the old regime, yeah.
Suppose we are earning more than 2 lakh through the interest from the bank deposits.
Right.
I'm not talking any other instrument of this thing.
Okay.
Only the bank deposit.
Yeah.
What is this thing?
So there will be a TDS now of 10% on this. You will be subject to 20,000. But if you have no other income, then basically you will have
pension the pension is there.
So if all income adds up to 4 lakhs, to 4 lakhs, the tax will be nil. So the TDS
does it exclude pension?
No, so there is an exemption. So ideally, I would want to say that it does not exclude pension because the pension will be given. I think, is it a family pension or how it will depend?
It's a family pension, yes.
Yeah, so there is a calculation. I think 1/3 or something is exempt. So assuming that you get that exemption, the 2/3 is taxable. If you add that, if it adds up to more than 4 lakhs, then you fall in the 5% tax bracket under the new regime. Okay. Then you compute. So suppose for 5 lakhs, you'll have the tax of in between 4 to 5, 1 lakh, you have 5,000 rupees. So 5,000 you will have tax, but you already have TDS of 20,000. So you'll have a refund situation of 15,000. In order to mitigate this, you can there are certain forms that you can file with the bank. The senior citizen can file with the bank. 190 this 15GH. So that forms will help the banker to not deduct tax on you if you are not having a tax liability at all.
Okay. Now my next question is Vineet.
Yes,
Vineet,
sir.
are you there?
I am there, sir. I can hear you.
Vineet, see 123 part of the budget speech is the electronic goods BCD. On the display, it was from 10% to 20% increase.
Correct.
Now, will it not affect the industry in a negative side? Because there are hardly...
Because there's an ask from the authority, all the industry players, on the flat panel to increase mainly from two aspects. One, to safeguard the domestic units, and also on the inverted structure of duty, where these flat panels are used. It's asked from the industry, and that's why the government has given really increased the duty on that.
Okay, because no, I think there's hardly 4 or 5 companies in this country who are manufacturing the flat panel display. So most of them are being imported. So where is the Make in India in that case?
No, it's a raw material. It's not purely, obviously you cannot have a flat panel display putting in the market.
It's a flat panel display. It's not a raw material, it's a product.
Correct. It's a raw material for a finished goods, and based on industry only they have given the.
Correct.
They have taken the decision.
Okay. And one more, what is this? 124 lithium-ion battery exempted from the capital goods. What is this?
So for a battery segment, where you will manufacture in India, whether battery for mobiles or a lithium-ion batteries. So obviously, to put a plant, I need capital goods.
Okay.
So for identified capital goods, they have made duty nil, which was earlier 5% or 7.5 other rates.
But already the raw material is available in this country. The lithium is available in this country.
No, sir. Capital goods I'm talking about. If I need to manufacture lithium battery, I need certain capital goods to be imported, which are not manufactured in India. So for that, they given relief.
Okay. The last one is the BCD on telecom, which is reduced from.
Which is continuing. They have continued the earlier notification.
Last year also it was reduced, no?
Yeah, no, it was continued. It is continuing notification, they which have further continued for 2 years.
Okay. Thank you so much.
Swati, we can take your queries now.
Yeah, sure. So, I just like to know about the MSME scheme. I need a detailed breakdown on the new or updated MSME scheme. What's going on right now?
MSME, they only changed the definition
Okay.
for the micro, small, and medium, and increase the credit guarantee limit for all the players, and even for exporters, they increase the part. That's the major relief they given to MSME.
Okay. And yeah, there was so much discussion going on for the old and new regime continuation for income tax. So what's your thought on that? Like how it's going to continue beyond this financial year?
So old regime is not been wrapped up. It is still very much there, but
Okay.
there is the kind of proposals which have been introduced year after year in the last few years makes one think harder and harder how one should stay back in old regime, unless there are a lot of exempts, a lot of deductions in form of ATC, and then you have housing loan interest, HRA in the salary, huge amounts. There is a very narrowing gap in the benefit that one can still enjoy while staying in old regime. We will have to still work out on fact-to-fact basis. But yes, anyways, I think more than 70% of the taxpayers, especially on the salary, I think, have already moved to the new regime. It's only the balance 30% which the government has quite clearly, through its intent that even those will move. We'll also have to wait for how it is addressed in the new tax bill. But I think what my gut feeling is, it will remain for a few more years before it becomes completely irrelevant for anyone to opt for.
Got it. Yeah. And I would like to also know about the two-house property tax implementation and what will be the benefits on that for the individuals owning more than one residential property.
So this is for those who are not, staying in their own house, right? And they are staying in a rented house. They claim HRA. And they have their own houses also. So up to 2 house properties, they are allowed to offer no income on those, because otherwise there is a provision that if the house is vacant, you have to take the fair value. I'm saying on a high level, the fair value of the rent that you would have derived if the house was let out, and then you deem that as an income and compute the tax on that. But up to 2, it is allowed to be considered as a self-occupied house property, deemed to be self-occupied, although it's not occupied, so that you don't suffer any tax on so-called deemed income when this is not being used. Earlier, this provision was already there, but there was a right to that you can do that if there is a condition that you're not able to occupy those houses because of some compulsion job requirements or your occupational requirements. Like, for example, in Mumbai, people who stay far off from their job places, say someone working in Andheri and other place being, say, far off Thane, or not even, and that's even far. Could be some Delhi 50, 60 kilometers, 80 kilometers away. Those reasons were acceptable. Now, the reasons to be provided have been done away with. Straight, no conditions, no questions asked, 2 house properties can be declared as self-occupied house property.
Okay, thank you. So we have Sandesh sir here also.
Hello, good evening.
Hello, Sandesh, how are you?
Thank you very much, Jairaj sir.
Yeah.
Vineet, thank you very much. Aditya, thank you very much. Nikhil, great insights from all of you. It's a very interesting thing because, as rightly mentioned by this budget is still getting digested in a way, because the market reaction, as you see, right, HUL share went up by almost 5%, then settled down for 2% plus kind of thing. The consumption, what you're talking about. just on that particular front, that consumption economy is what you're trying to boost, and what Aditya just mentioned about this two house property. There may be every likelihood that people may tend to wait into the real estate in the future with that benefit in place. That will be a very interesting thing to see over a period of time how it's going to happen. It's a very interesting budget what we are seeing, and from the MSME perspective, yes, sir, you are very much right. There was a huge hope to have more things to come up for the MSME as such, because the hospital has quoted it roughly constitutes 45% of our exports. Compared to that, we'll always keep hoping for the more from the government to support MSME sector. That continues. And overall, I think we are all good at this moment. We'll wait for the further news, insights, fine prints, maybe on Monday. Thank you very much again from my side. And Vineet, as every year, you keep doing this thing for us very consistently. And it really helps. Many times what happens, somebody could not join the live session. We do percolate that information after this session to all our customers and our associates, and then they react nicely.
Thank you so much, Sandesh, for giving a point on your platform. And obviously, today, first time we've done session on the same day. And then we do on the next day, looking to Sunday, better to give insight today itself. It was a rush for everyone, and thanks everyone for coming together and doing this.
Thank you, Sandesh, for the kind words and the knowledge, and thank you everyone else. Do we have more questions?
No, we are done with all the questions and queries.
Yeah, all are in holiday mode now after this
Right.
income tax relief.
One point here I wanted to make.
All panelists can keep their video on. So I think, Swati, if you can manage your one screenshot.
Yeah, sure.
To calculate the news, right?
So Vineet, I had one point. The first time I am seeing at least customs being taken up first. And I could sense, is this the Trump factor already? We preparing for not being subject.
It's a preparation for Trump impact and if you see economic survey also.
Initially, when she started speaking, I thought it is a Bihar government budget.
Jairaj sir, I will request if you on your video. Jairaj sir, can you on your video? We need a screenshot.
That's why some people say.
Can you on your video, Jairaj ji?
Budgets by not.
My video is on.
People say that budgets may not at times be made by PMO, but by the Secretariat Revenue, because if there is a PMO involved, the political compulsions will force them to have this.
So this point is really very important, that customs introduced for the first time, and that also straight away not having a duty on the imported medical. That's the good thing to have it. How it impacts the pharma sector, particularly if we talk about the Andhra Pradesh, that region, right? That way, because
the pharma obviously whatever products they have made exemption on lower duty. Yeah, all are mainly the producer from US or European Union market for cancer and other devices and all.
Onco, yeah.
Yes, that's a big relief here.
There are a lot of changes on the Onco. Plus, they have announced setting up 200 Onco daycare centers in government hospitals. So I think somewhere it's realizing the cancer is.
Aditya, anything for you, because you are sitting in the big pharma company. You know better.
So there is this bulk manufacturing on exemptions on the bulk import manufacturing. No, that I think would be relevant. I'm yet to delve into this. I could barely complete my part of it. Yes, but I think there would be.
Swati, we can close it.
Sure. That was really a great session. A very huge thank you to all the panelists for sharing their expertise and giving us such a clear understanding of the budget. We really appreciate taking the time, and of course, big thank you to Darda Advisor and Sailotech for organizing this event and making it possible. And of course, thank you to all the audience for joining the session and giving your valuable time.
Thank you. Thank you.
Thank you. Thank you all.
Thank you. Bye-bye.